Hello, investors and traders, and welcome to the weekly market report with the market guys. I'm AJ Monty. This is a one-year daily candle chart of the Qs. This basically is the ETF for the NASDAQ market. And as I do each and every week, I left my lines on the chart so you can see how the technical signals are working out. Last week, I said that we would most likely go up to test this resistance and pull back. And what happened was we pulled back first, and now we're testing resistance. So it's a little bit off on the timing, but you can see right here as I zoom in, this is a spinning top, and that spinning top is on lower volume with a gap below the market. So I continue to see negative signals. Even though the markets are going up, the signals are still registering more on the sell side. And if I erase these lines and redraw that resistance, you'll see exactly what I'm talking about. This high back here is the resistance point that I originally drew and said we would test right there. And you can see that there's another resistance point up here. See this? And then just above that, guess what? We have another resistance point. So the market is overweighted in resistance at this particular point. So any long positions should be protected, especially if you're trailing the stop. So in other words, if you're long any NASDAQ stocks, it would be a good idea to protect your positions and protect those profits as well. Now, with this drop in volume and the gap below the market with a spinning top, that's suggesting that the markets are most likely going to pull back to this 20-period moving average. So I'm still waving the caution flag here for anyone who's long or thinking about taking a long position. Now, if we go to the spiders, that's the S&P 500, ticker symbol SPY, you'll see the same thing. We're more or less in a stalled market. And again, we see a resistance point right here with a doji. Dojis are generally found to be signs of indecision. So I'm going to erase that, and I'm going to draw this resistance right here from that high and draw that straight across. So we're right at a resistance point with a doji on lower volume with the stochastic still overbought. Anything over 80 on the stochastics is considered to be an overbought market. So again, my forecast is going to be lower. Even though January was a blockbuster of a month, and we haven't seen a January this strong since 1987. There's an old saying that as January goes, so goes the year. I'm not quite sure that's going to be the case. Because if you look at the diamonds, and this is where you really have to pay attention to what's going on. You see this long-term trend line, that's the accelerated trend line. The markets are still having a hard time staying above that. Let me zoom in here and show you what I'm talking about. This too is a doji, sign of indecision. We are right at a resistance point now up here. And if we drop back down below this former trend line with gaps below the market, there's a good possibility that'll happen. You can see all the signals. We have a drop in volume on that doji, a sign that the buyers are losing some of that momentum. We have stochastics showing overbought. Again, that is a sign that the momentum is starting to shift here. You see this blue line is going to start to go down. That's my forecast for the stochastics. And that will in turn spark some selling activity right there. So I'm going to erase this line and I'm going to just move it on over. That's all I'm going to do. I've been doing this for the past 2 weeks. I'm just moving these trend lines or these pullbacks just out a little bit further. I do think we're still going to pull back right here to this support level. And again, only time will tell. But this diagonal line right here, again, I am very, very concerned about that because if you look, we have a long stretch of green here in the weekly candles. That's 1, 2, 3, 4, 5, 6 green candles. And that's called a stale green light. And when we have a stale green light right at a role reversal trend line, there is a good chance that we could still pull back in a big way. Now, don't get me wrong. If you're trading the indices through the ETFs, that's one thing. But we are still believe it or not, taking long positions in individual stocks. Our option traders had an incredible week when we took a long position through a spread that we did in Tesla, and it just worked out amazingly well. And so if you're interested in learning more about how to trade individual stocks, even against the market sometimes, then look into our trade alert services. But again, look at the angle at which this leg has been going up. It's a fairly steep angle. And if you look back in the past, whenever we'd have these long and very steep angles, we generally drop in a big way. So I'm still, again, like I said, I'm still very cautious on any long positions. Even for the option traders that we're catering to, I definitely stress the importance of risk management, and I think everyone should be doing the same thing. All right, if we look at the Russell 2000, which is a more broad-based index, ticker RUT, you can see, again, look at this steep angle. We did not pull back, but we are stalling again with a stochastics almost 90% right there on that scale from 0 to 100. So we have a steep angle here in the Russell 2000. Even the 20-period moving average is in a fairly steep angle, much steeper than normal. And so, again, that's a reason to be concerned. And I'm going to erase all these lines and just show you really, again, the angle at which the former legs have gone up. You see back here, we went up in this angle, close to 50 degrees, and we came back. This angle, again, about 50 degrees. We came back. This is greater than 50 degrees. You see back here? And so I think if we draw this as a trend line, let me start from the very bottom and draw a steep trend line from this low connecting to this low and these lows up here. Again, that is the upward short-term trend line. And so any close below that line is most likely going to cause the Russell 2000 to drop. So again, do yourself a big favor and learn how to draw trend lines, not just the flat line support and resistance, but learn how to draw these trend lines connecting lows so that you know where the breakpoints are and where to protect yourself. Now, if we look at the VIX, that's ticker symbol VIX, you'll see that we're right on the support level. I said that we would go down and test it and bounce. We haven't bounced yet. Let me make it a little bit straighter so you can see. It's from this low. This is a flat line support level. From that low to that low, projected out. You see that? We are right at a key support level for the VIX, with the stochastics showing almost record low for the year. So I believe that the stochastic is going to start to move up, showing upward momentum in the VIX. Again, I'm just going to move that line over to the right, just like that. And if the VIX goes up, what does that mean for the S&P? They're inversely related, so that means the S&P will most likely drop. So that's our weekly market report for now. Have a great weekend. I'll talk to you next week. Again, remember, use good risk management discipline here. In fact, follow the 1% rule. If you go to our website, click on the video tab, you'll see a video that talks about the 1% rule for managing risk. I encourage you to look at that. It's a short video. Learn how to manage risk, set your stops, trail your stops, and again, for the option traders, just learn how to minimize the downside exposure, especially when we're in extreme upward moves, and follow the technical charts. So again, have a great weekend. We'll talk to you soon. So long.
This video segment is a small part of what the Market Guys offer through their educational products and services. If you are interested in any of our trade alert services, or you would like more information about our one-on-one mentoring program, simply contact us at info@themarketguys.com.